Good morning, traders. Welcome to the TMT stock market strategy video for Tuesday, December 2nd. Well, we got a little bit of a push at the end of the day. Here's a 5-minute chart. Just wanted to show you. Really not much has happened. We rallied here, but this is a 15-minute opening range from top to bottom. And I like to always trade outside that range, whether it be to the upside or to the downside. And sure enough, when we got up here, we got some economic data. And sure enough, we sold back down. We rallied again and just chopped around pretty much all day, just until about the last hour of trading. Buy programs came in, ran the stops right up, and this is where you would get long, right up in this area. Outside of the range, now again, you could have gotten long here. You probably would have gotten stopped out if you were fast enough, maybe take a little bit of a profit. I don't like to trade this. I like to get the next first back test out of the range and then move higher. And that would give you confirmation that we've made a higher low from the low here. But, of course, we did not get that, and we just chopped around all day. Very, very quiet trading until just about the last hour of trading. Sure enough, we broke out. We did get that little bit of a back test, that bull flag, if you will, right, from this previous low to that previous low. And that next move really kind of solidified, you know what, let's run the stops up, and that's exactly what happened yesterday. So although the daily chart, right, looks fantastic. Wow, look at this. We just broke out of the range, and we did. I mean, there's no question about it. But if you look at this, we did really nothing until the last hour of trading, and that's where the manipulation comes in on the daily chart. So don't get so caught up onto daily charts. Look at what's happening. Dial down into, you know, a 15-minute time frame, a 30-minute time frame, whatever you feel comfortable with, whatever your plan is telling you what to do, okay? Daily chart spiders here. We clearly broke out. Let's see if we can hold. We get back to we get back down into this lower trend line, which is coincides nicely with the 20, then we can actually start to move a little bit higher here, okay? But still, guys, it's the 3 weeks window here we have. There's a lot of uncertainty, right? Is the Santa Claus rally happening, or did we get the Santa Claus rally? Market divergence still upon us. Now, again, it does take a while to happen, but you know, you got transports, Russell still not participating in this rally, okay? China's still in terrible shape. Retail not doing anything. Banks not doing anything. The technology sector, you know, have a handful of stocks like Google yesterday rallied up pretty hard. And those are the ones that are holding up the cues. That is a concern to me. So I'm going to pick my spots, and I'm going to wait to be very, very patient here in this trading for the next 3 weeks. I do think we're going to get some good volatility. I think 2016 is going to be some fierce volatility, if you ask me. All right, transports. Again, in the symmetrical triangle, weekly chart, we have a head and shoulders bearish pattern, which has not triggered yet. But again, bearish patterns are starting to show up here. I think in the longer term, again, moving out 3 to 6 weeks, we're going to see either a big explosion move to the upside and or to the downside. I think the market goes lower first before higher. And again, we're in this apex. So any given day, we should get a breakout here. If we break out to the upside, which that may happen. I mean, 2130 in the SPX looks pretty much a possibility here, and that's in the cash index. So 2130 really doesn't look too bad. If you go grab a daily chart, it's definitely doable. There's no question about it. So you know, again, keep an eye on some of these bigger indexes just to show you, you know, what's happening here and look underneath the hood, if you will. McClellan oscillator with the indicator. I don't have it today, but it's showing a plus 37. So it's starting to creep up to the upside here. Again, plenty of move to run to the upside to hit that upside target of 2130 in the S&P cash, probably 2125 in the ES. That's the futures contract. Take a look at the Russell. Now, it's a good sign that we're above the 200, so maybe we do get a little bit of strength here and push higher going into year end, okay? Remember the tax selling, though. That comes into big play here. And also, guys, today, it's going to be a very choppy day today. There's a lot of Fed governors speaking, Janet Yellen speaking as well, a couple of times this morning and once in the afternoon. You have to keep mind of that. And also we have the non-farm payroll numbers that come out on Friday. That's also going to be a big factor on what's happening with interest rates, okay? So let's keep that in mind as well. So there's a lot to digest here in the next at least the next couple of weeks. Diamonds, you can see here, again, same thing. At the end of the day, all of the indexes pushed and they ran the stops. There is really not any true buying out there other than just indexes running the stops up here, okay? And lastly is the Qs. You can see that, again, from this ascending triangle that I drew yesterday. You could see that here. We're starting to break out, challenging the highs, and maybe move higher. Some of the big cap tech is just out of control. I mean, if you look at Amazon and Google, I mean, I would never, me personally, buy anything up, 100% in a year. I mean, literally just, and even in just the last, week of trading, 60, 70, 80 points, 100 points. There's plenty of opportunity. Let it digest. Let the markets give us a pullback. And then for you longer-term investors, that's when you step in and look to buy it, okay? Hope it helps, guys. We'll see you tomorrow. Have a good day, and definitely use your stops out there, especially today, guys, with a lot of activity happening in the economic data and the Fed governor speaking. Take care.